fundsupermart.com.
Dear investors, today I'd like to actually talk about a big change that we're making to our pricing structure that I think would be very exciting for all investors. Basically, what we are doing is actually we are permanently lowering the sales charge for regular savings plans for all of the over 400 unit trusts on our platform to 0%. This means that as long as you are using RSP to buy into any of the over 400 funds, you can do that at 0% sales charge. So this is actually a very big thing, and it actually brings a lot of benefit, especially to the small-time investors, because I think RSP itself is a very good way of saving and investing. So now on top of that, we're actually by lowering the sales charge to actually zero for this particular method of investing, it will actually benefit all investors alike, but in particular small-time investors. So in addition to having this pricing change, which is what has been the trend in the terms of upfront sales charge coming down, because earlier on we actually had WISE funds, which a group of about 51 bond funds, which also lowered to 0% sales charge. This is another step in this particular direction. So I think it continues on a particular trend whereby we actually see sales charge coming down. So for Funds One also, we're actually phasing in more and more categories, whether by investment method or groups of funds whereby the sales charge is actually as low as zero. Now, will we ever approach a day whereby everything is zero? Hard to say at this point, but certainly I can see the industry moving towards this. Now, in addition to this, to also further focus investors on this particular new concept of being able to RSP at 0% sales charge, we have actually going to come up with this new exciting RSP challenge. So what's going to happen is we've actually come up with three portfolios, three very distinct portfolios, but all of them are balanced portfolios with three funds in each one of them. All of these three funds are WISE funds. So there's a total of three portfolios of three WISE funds each. So for investors, not only do you get 0% when you RSP, what happens is that for these three particular portfolios, if you actually start an RSP into these portfolios over the next 1 month up to the 5th of April, then what happens is we'll track the portfolio for the next 12 months. At the end of 12 months, if there are losses suffered on these portfolios, then actually we will actually pay you something up to as much as $100. So to a certain extent, actually, you can say that we are covering part, if not all of the possible losses if you actually RSP. Actually, we are quite, we feel confident that we generally believe that if you RSP, you should actually do well. But this is an additional level of assurance from us, in the sense that if, in the kind of odd situation whereby the funds or the markets, the bond markets don't pan out quite the way we expect them to, then actually we'll put our own money on the line and we will actually pay you, the investor, something. So this is actually an exciting new RSP challenge that we have actually come up with. So I think it's a very interesting RSP challenge, which investors can probably take quite a close look at. Because what this means is, if you actually see the bond markets move up, then you will benefit from the gains. And if the markets don't go the right kind of direction, you actually still won't really make much of a loss at all, because we'll actually cover the losses up to about $100. So with that, I do think investors should take a close look at these three portfolios. They will actually, they're not all boring portfolios with nothing but the safest of the safest short-term bond funds or anything. In fact, all three portfolios have elements of high-yield bond funds or emerging market bond funds within their the three portfolios. So actually, they are planned in mind to also actually have a certain sort of yield pickup in mind, as well as to be able to give overall returns which should actually be able to be much better than the savings account style rates that you can get from a bank. So I do think that with this very exciting new challenge, investors should look at RSP in a new way and think seriously about whether or not they want to adopt it as a regular form of savings, whether for be it for retirement, for children's education, or any particular type of objective that they might have in mind. Okay, so in conclusion, we've come up with some very exciting new changes to our pricing structure, and on top of that, we have a very new exciting RSP challenge. So for investors, I do think this will be an exciting time for markets, and we would like to also, of course, further incentivize you to participate in the meantime as well by using these changes. Thanks.